TikTok, you know what to do. Hit that like button, ask the questions, and I'll answer you in between. Right, Bitcoin. Here we go. Let's start. Right. I think when we started this a few weeks ago, we were at this point here, projecting this range here to give us a target about here. But what I don't like or haven't been liking is how long all of this has been taking, right? Which makes me think that all of this that's happening in here is just one big consolidation before we get another leg down. So this past week in particular, and if you are in the Discord, you would have noticed we called for this move here, and then the breakdown here, and I think we also called for this, and what we are looking for or expecting next is for BTC to head down here, right? And we would be looking for this liquidity here to be taken and for BTC to come somewhere in that zone there. So just below one of these previous weekly opens and fill in the FEG here, so we would be looking for that move. If we can get this move here, then the likelihood is we may see the next move up be that, and eventually get to our target, which we had all the way over here. Let's just put him here, and then be done with it. So once we achieve this, hopefully this week, we can start to slowly grind up into this, build a model around here, and then take it a leg lower. For now, we are within several types of zoom models. The bigger zoom model being this. So we had accumulation, failure swing, opposing liquidity run. Once we got above this high of the failure swing here, right here, we need to now look for a move back into the range here. And if you notice, I have a green candle here, and I think this is the candle for the lowest closing, the open of the lowest closing down candle before this move here happened. So this move here happened was just a run on liquidity, a fake move or a fake low in the market, and the actual move or the actual low in the market was this guy here, right? Whatever happened in here, that was the actual low in the market. So the expectation is we can see there's a bit of imbalance down here, and we'll tackle that now. What's up, Jeff Quinoa? Right. In this particular move here, this area here gave us the shift in market structure right here. So what happened down here is we had another zoom model where we ran liquidity here at the lows. We had an accumulation, a failure swing, a liquidity run, a push, a retrace, and then continuation. This black area that I marked off was the fair value gap created before the move down. And what that actually confirmed for us was a shift in market structure from being bearish to bullish. Now there's a few ways you could have, the entry model here allows you two ways to enter, and that would be any close above the fair value gap. So this is the candle that closed above it. You buy the very next candle here. And then you could see if you did that, then you could have got the move up here. The alternate to that is, and I don't like it on this particular 30-minute time frame, maybe if we went down to a 5-minute, is you could have bought a retracement here on a lower time frame in here. But I'm actually more who's that? I'm actually more comfortable once we started to break above this down close candle here that there was a shift in structure, and we can be patient, we can wait. It's taking a long time, but we expect price to fall back into the area here. Now you've got a slight dip into here. You can see here at this point price dipped in here, and what this created in itself was an entry model here. So again, we had accumulation, we had a failure swing, we had a liquidity run, and then a push, a retrace, and then continuation. Now, what you need to be aware of when you're looking at these models is this, right? Anytime you get, let's look at a bullish version, right? Or a bearish version even. Anytime you get a piece of price action like this, once you see this move here, this means that buy side liquidity was run, right? Buy side liquidity, let's pop that in here. And then below that, we also ran the sell side liquidity right there. Depending on which was run first, in this case it was buy side and then sell side. It means that we have now created a dealing range which is bearish, right? We ran buy side, we took the buy side, and then we ran the sell side. This created a bearish dealing range. All you are interested in is what's in discount and what's in premium in this range, whether it's, and then you're going to look for your PD array. So anything above the 50%, you're either going to look for entries here using a zoom candle, you're going to look for fair value gaps, or you're going to look for even order blocks, right? When your entry starts, or when price starts to push back into any of these here, you're going to wait for an entry model to form here. So again, running some sort of liquidity, creating a range, pulling back into a PD array, and then you're going to enter your shorts, stop above here, and then you're going to target the lows or something lower, right? So this is the basic theory. Once liquidity is run on both sides, it creates a dealing range, and then you're going to look for retracements above the 50% in order to short, right? Just keep that in mind. So same story here. We ran the sell side first here, then we ran the buy side up here, which means we stopped out anyone shorting here and here. All you needed to do was look for the retrace of the dealing range, which gives us discount areas. So if we took 50% of that, let me just get a proper firm on here, right? It would have given you a 70.5% optimal trade entry to enter here. Now on a lower time frame in this particular price action, I'm just going to do this so I can come back to it. Let's go all the way back down there and see if there was anything on an even lower time frame on M1 for us to have taken anything there. I hate that TradingView does this right down here. So this was the price action that we were talking about. You can see on the lower time frame we formed another low time frame zoom model here, right? I think this particular one I took on M5, but anyway, accumulation, failure swing, open liquidity run, push, retrace, carry on. But what you would notice is that price pulled back into this at some point right here. This is where you need to look for your entries. If you didn't get something here initially, your entry would form here, create liquidity here like it did. So this is sort of inducement liquidity. Move away, come down, take that liquidity, and then start moving away. So we need to be aware that liquidity is engineered before our actual entry can take place. That was the entry there. Then you have another model forming where you have this, this, and this. As soon as price pushed away, you are looking for price to do that. At some point, price is going to come back into that area. Right, so just keep that in mind. 16,170. There's some imbalance in there that needs to be filled. So at some point, we're going to come back in there. The second idea you need to keep, give me 1 second. Second idea you need to be aware of is that price doesn't just move up and down without any objective. Price will move from imbalance, liquidity to imbalance, imbalance to liquidity. So any or every of the moves that you see here are always moving between one of those, right? They're moving from liquidity, so liquidity taken here in this particular one. Liquidity taken here. Price then moves to any imbalances in here. Once we've done that, price then moves from imbalance to liquidity. Liquidity here, liquidity taken here. Once we have this done, price will then move from liquidity to further imbalance, which you can see up here. The sooner you understand the concept that price moves from imbalance to liquidity, liquidity to imbalance. So once we got imbalance in here, where is price moving for? Liquidity. Resting all below these lows here. And there should be something to the left here. There's liquidity here and liquidity here. So it ran the liquidity. Once it started to do that, it'll now seek to move to imbalance. So you had liquidity taken here to imbalance in here. Let's just do this. To imbalance in here. Imbalance to liquidity, right? Took all the lows down here. Liquidity to imbalance. That's all that it is. Keeps moving back and forth between liquidity and imbalance. Now that I've told you that, you have one, let's call it a weapon, right? You have a weapon in your arsenal to now take trades based on just that concept. Once liquidity is taken, where is price likely to move once liquidity has been taken? It will seek imbalance. So lowest hanging fruits, this is your first imbalance. You could have taken it there. If not, you have imbalances all the way up here, and price will not move from imbalance to liquidity until something in the price range has been balanced. Now this is one of the reasons why when we came to this point here, I put in the Discord that we took the buy side liquidity here, we took sell side liquidity here. What that created was a dealing range from the top here for Bitcoin, from the top here all the way down here, which means my only job was to plot the PD arrays here and look for how I can get from down here to in here. This is where my short entries are going to form because price has shifted structure from up to down. We are looking for PD array retracements into a discount and continuation. Right? So let's look at that now. When we got down here, this was the first move down. We went from liquidity up here down to imbalance in here. Once we created the imbalance, we needed to move to liquidity, right? You could see there's a bit of liquidity taken here from here to here, and then from liquidity back to imbalance, which took liquidity here as well. We moved from liquidity to imbalance here, which also took liquidity here. Now, at this point, I'm thinking on the weekend, yesterday in particular, I want to see price come up into this zone here, right? I've had an eye here. Let me just see if I can, let me have a look here. If I can pop this onto the screen.
So you don't think this 70,280 didn't took the liquidity?
Nothing has been taken yet. Nothing taken
Ah,
yet.
okay.
Nothing taken yet. I'm going to get to that now, right? And then we're going to talk
Okay.
about a few other things. Not sure where I posted it. Maybe in the boiler room chat. Here. Okay. Copy image. Hopefully I can paste this in here. Too big. Okay, that's fine. Let's do that. Let's open the original. You guys are not seeing this at the moment. Okay, that's fine. I'll just explain it. At this point here, I'm starting to mark out all imbalances. And if you zoom in here, the only imbalance I could see down to a 1 minute was between the red lines here, right? 17,098, 17,096. I can see all of this liquidity being engineered here, relative equal lows here, but the imbalance is not filled. So as price comes into it, my risk, let's go back here. My risk here is this was liquidity taken here. So this was accumulation, this was the failure swing, this was the liquidity run, and then as soon as price started to do this and got back above the failure swing, I know that I'm looking for retracements in order to go long. Where would my entries most likely form? They'd form around here, around this level, which was the opening of the down close candle taken out in time. But more importantly, I know that it's going to seek liquidity and imbalance, and the imbalance happened to be here. So my risk here was enter here, stop below here, and we are looking to target imbalance on the 1 minute, which was up here, right? Besides imbalance that is here, so I exited my trade at 17,260. This went to 17,265.60. So 17,100, I took the trade up to 17,260. You could have entered this trade because, as a rule, you don't trade the fair value gap blindly, right? You don't trade the fair value gap blindly. But I accepted the risk, that my risk was here, seeing all of this, wanting that. Your trade could have been, you had another fair zoom model form here. As price retraced in here, that was your entry. Now let's look at that on a lower time frame. Price took buy side, sell side liquidity here. Let's just make this a bit bigger. And then we proceeded to take buy side liquidity up here. All of this created a dealing range from the top here to wherever, from the bottom here to wherever it ended up here. All you are interested in is how can I enter in discount. So if this was the 50% here, look where your entry formed. In the fair value gap that was left behind here. So you didn't have to take the entry I took. Your entry could have been enter here, but again, you're not entering blindly. Enter here with your stop below here. And if you zoom down into a lower time frame, you're going to start to see another zoom model form. Accumulation, failure swing, liquidity run, push, well, lower time frame push, retrace, and up. Now, if this does not take liquidity here, so this was the expectation, 17,260. I'm going to tell you why else that particular area in time, besides being a 1 minute imbalance somewhere in here. The liquidity, I'm going to put an indicator on for you guys just now. If this does not take liquidity here, which it hasn't yet, we don't have a dealing range on our hands. So ideally, I want to see this get taken. Once that gets taken, I know we took buy side above here. We took all the liquidity here. If we take sell side here, back to where I entered, that means as price retraces here into some sort of PD array or discounted area, which we'll mark off now, from here, down here, let's say here, anything above here for me, here is where I'd look for my entry to form. Get it? A dealing range, a dealing range has been created, which is a bearish dealing range. If we break down through here, we're looking to retrace here and take it down there.
So you don't see it higher than 17,300, let's say.
There's a possibility that tomorrow may do that. I'll tell you why. Why it may be a possibility, but it's not technically not proven, but it's a theory, right?
Okay.
The theory is, and I've told you before, is that if this is a futures sort of contract, that any price action from the closing of the market Friday, let's say 4 p.m., right? Till tonight, Sunday, 6:30, here, does not exist. All of this that happened does not exist. It's not real price. It's not real price because it wasn't in the futures market, right? Having said that, there's a chance that this high could have been inducement here. And once price starts to open in here, we'd seek this one more time. Just like I said on the previous week, let's take a look at the previous week, right? I think this was where we are last week. And I remember saying this on Friday 4:30, 4 o'clock. Till Sunday, it was Sunday 6:30, right? It's when the market opens. This was not real price action. Which means when price opened here, when we were in here, the market remembers that there's something here and there's liquidity up here. It's going to seek it. It doesn't consider any of this to be real price action. Right? That's the theory. So this is one of the reasons why once we opened up here, we went for it. And when we came down, we came back into this area here. Made a little consolidation, pushed. We created another dealing range here. So the same theory is going to apply here that it did last week. We took buy side. We took sell side. This middle leg here is called inducement. It created liquidity when it did that. So what was price going to do? Price was going to go for that there. Take out the liquidity here. And this is still the move we're looking for. Now, we are at this point here. Knowing that we have a higher zoom model on our hands here, which means this was our actual dealing range from the top here to the bottom here. All of this is where we're looking to enter above the 50%. We're in the range here now. Now we're looking for entries to form here. So we've got a mini model within the bigger model. So this being the bigger model, we have a mini model within it here. Now, if the theory works out that when market opens, we may get a push up one more time, it's going to be that. I don't expect it to go higher here. Right? It's an untested theory. It may not do that. So let's see how this opens up in a few hours. If we ignore all of that, then the simplest theory is we've now created a dealing range here. Can you see that? Because we took buy side and now we took sell side liquidity here, this can do something like this, can even go more down here, and then go up here, which everyone will call some sort of head and shoulders meme pattern. But that's not what it is. We're not trading patterns, we're trading time and we're trading price. So now that we confirmed that we have a dealing range here, just give me a second. We confirmed that we have a dealing range. Because we took buy side and then sell side, we are looking for that. If we are looking for that, I'm expecting an entry to form. So let's say we accept the risk and we take that, but at the back of our mind, we know that there's a possibility that it just wicks the high here, right? But the trade to take would be an entry forming around here, which is, I can even, I won't say there exactly, let's get it a bit better. This was the highest closing up candle, so we may have to go down to a 1 minute there. Still a pretty shit candle, right? So your entry you'd ideally look for your entry to form around here. We'll pull that out in time and we'll fix that up now. 5 minutes. If this was the real high in the market before what we just saw, then as price comes back here, then we shouldn't see it go higher than that. It should come in here, and give us another entry model here to take it down here. That's the theory, right? So that's what we'll be looking for, retracements to go short, since we've already met an objective here and seemingly we've balanced whatever's in here. Ignore the wick because this is probably a balanced price range down to a 1 minute. I don't think you're going to find any fair value gaps here. This block here may work as something called a rejection block. So even if price came in here with a spike, which I said is possible, it's likely to reject here and carry on further. Right, but for now, see what we've done here? We've created liquidity here. We've created a dealing range here. With this move down, we are looking to come back up here and take the liquidity that's resting above this middle leg. Entry model forming. Short. Oh, give me 1 second. Just gonna make this guy right. So that's the idea. That's the idea on Bitcoin. It's going to be the same sort of trade across the across Ethereum, across everywhere else, right? So that's the one you're going to look for. You can see Ethereum did the same thing. It engineered liquidity. Let's zoom this in here. Sorry. We took buy side, we took sell side. We created a dealing range. We are interested in what discount is in this dealing range. Anything over 50%. We have the 70.5 tap here. And why did it do this here? Simple answer, liquidity. So we had a dealing range created. In the group, you guys were asking me, why did I choose this particular price here? Like, why that price in particular? Why did it go there? The simplest answer is, and you had to work for it.
No, I hear only noise. Somebody has to be muted.
I can't hear you, Al Dente.
I woke you in the boiler room.
Yes. Who's making that noise? The noise is off now, Al Dente. I switched it off. You shouldn't be hearing any noise.
Okay, now I hear. Okay.
Yeah. Why did price come to this specific point here? You could go back, you could study it, try and figure it out, but I'll give it to you now, right? You had to work for it. Basically, it was the opening price of the highest closing down candle, up candle, in the range, before the liquidity was taken. So if we make that red, which I did, al dente, you saw that, made it red.
Yes.
So this was the liquidity being taken here. This was the real high in the market before this happened. This was a run on liquidity. So I'm expecting now when price comes back into the zone, it's going to come back to the real high here. And the opening price of the real high, it could have went to anywhere here, but the opening price of the real high, you can see I've marked it out in time. And as we take it across in time, that's what happened. Right? It came just short of it. Now you could have taken the opening candle as an order block. I think on a 3-minute, it would be here. Let's just do this in time. There. Right? That's the zone that you are looking for. And let's have a look here. That's where it came. Right? In there. And look how the candle body is respected. Very important. Wicks are allowed, candle body is respecting. Now, why did it come back and take this? Knowing that BTC was, so BTC didn't do this at that point. BTC didn't do this. The BTC sort of came up here and then came down here and then did that.
Yeah, it was weaker.
Right. Not that it was weaker, you could say that it was that this was creating liquidity. Knowing that people are going to go short here on some sort of retracement, PD array, whatever it is that they were looking for, this didn't really, okay, we took something here maybe. I wouldn't call this what happened here a dealing range, right? Now, once we did this, it took liquidity. But now what did it do as well? Same story. It took buy side liquidity above here and here. And now it took sell side liquidity here. So expectation is even if it comes down somewhere here, we are looking for that. This is going to be the short that we need to take down there. Right? Makes sense. All you're interested in, guys, is if you're interested in shorting, you're only interested in when is a dealing range created. You're not just going to short and long in any place, right? So if you're looking for levels to long, if this was the level that price came into, and price sort of did that, and then it ran. So what that did was it took sell side. When it does this, it takes buy side, which means any retracements are for longing. Stop below here, long. Target anything that was a high there, right? There. That's a draw on liquidity. So it doesn't matter what you look at now, the theory is all the same. I just showed you BTC, I showed you Ethereum. You can go back and look at everything and anything, and the theory would all be the same. Now, besides that, let's just pop this guy on here, right? Change in the state of delivery. Let's look at where the drawn liquidity was. The drawn liquidity would be any of the boxes that were not taken. So this box here was a drawn liquidity, and this one here. Let's zoom in there. Let's turn off the lines for now. Right? That's a drawn liquidity up here. And that's where it came to. I'm almost certain of it. Hold on. Should have come here. If it didn't, yep, there is a likelihood that this may still come back for it. You see that, al dente? Small chance, small chance. So when the market opens, we may see that running early shorts and then going down. Right, so we'll have to watch out for that one.
I hope it goes till it markets opens, it goes to 16 and then.
Yeah. It's a big hope. Right, anything in terms of volume profile, you can see that again here, the value area high, not tapped, but that would also be a good place to short. So let's see what we get in here. I'll take the risk on entering shorts here. I actually wanted to enter here, but this was sort of a blind short. I would have had to go down to a 1 minute to enter here, and if I was watching it, this is what I would have done, right? Hold on. It's actually this simple, what I'm about to show you. Right? 1 minute chart. You can see a zoom model forming in here. This you would have had to actually go sub 1 minute to have a look at what's going on here, right? I think I can, but it's not something I'd encourage. Here, right? I'm not saying that everyone should go on a 15-second chart now, but I'm just showing you how the theory is all the same. Accumulation, failure swing, open run and liquidity, push. Now, tell me how this is not the same as what I've been telling you. Here's the buy side run here. Here's the sell side run here. What did that give you, al dente?
50% fib, and then you give what is in premium, you take short.
Right. So it gave you a dealing range.
Yes. Just 50%, yeah.
Right. So it gave you a dealing range. Once we took the high and then we took the low, it gave you a dealing range. All you had to do was this. I'll show you two ways. You could have taken a fib from the top to the bottom. There's your golden zone entry here. Right?
Yeah.
Stop above the high. Next entry. We use the fair value gap created here. Or we could have used one up here. Let's use this one for now, right? Let's use this one. Why I don't like it on the 15-second is the candle body is going above here. But you can see the very next ones close back below, right? So this is... All right, let's talk about this because I've spoken about this before. I'm going to make this as dark as I can. And the background color a bit darker there. So what this did now is you had a fair value gap. When is there a market structure shift here?
At the bottom of the fair value gap?
Right. So as soon as price trades and closes below the fair value gap, two things happened at the same time here, right? First, this candle here traded through the up candle here, which confirmed to us that this was an order block or is now an order block, right? That's one. Secondly, when this candle closed above, the very next candle could have been a short entry, right? Because that confirmed a shift in market structure. So you could have taken actually an entry here, or you could have waited for the safer entry here. And then let's look
I
at what
took
happened
it.
there.
I took it at 260.
Perfect. Now, let's say you took an entry based on market structure shift. This was a $126 move, right? And now it is sitting at, based on market structure shift, we are sitting at $165. Now let's look at something here because we're on a 15-second chart, so why not? We've taken liquidity here. You agree?
Uh-huh.
No. Well, I'm assuming. Let's actually find out. Let's actually find out. 5 minutes. Okay, we didn't yet. Okay, that's fine. Equal lows. Is it equal lows? Let's have a look. Relative equal lows, right? So no liquidity taken here. So I'm not interested right now in any reversal sort of patterns, but I can see something forming, but I'm not interested in any reversal patterns here. But there is something forming here, low time frame, right? You see something like that, you're going to see something like that, and then you're going to see it run back up here.
Okay.
Most likely what's going to happen, this is something else that I'm going to share with you now, is you don't see speed until you have a price. So that if you are bearish, you won't see speed until price trades back into an up candle. Here's your up candle. And this is on a 5 minute now, right? So this is your order block. You agree? The last up candle,
Okay.
that's your order block. Until price trades back into it, there won't be any speed. So this was actually the lethargic move down. Once we trade back into it, at least into an up candle here, even if it goes up here, here is when we're going to see speed. So it's not always, you don't always have to catch the first move. You may not always catch the first move. It's not always as easy as what I showed you on a 15-second chart. But there's a chance that the fair value gap that we use to confirm the market structure shift, that price is just going to tap into it there. And that is most likely going to be the tightest stop loss entry that you are going to get. Stop above here, enter here, write it down. Okay, we'll monitor that. Right, so no speed until price comes back and trades into an up candle. Use that for all of your trades. Okay, so we're done with Bitcoin, we're done with Ethereum, all the things are the same there. Let's take some questions and let's look at indices, gold, oil.
Yeah, so one thing that I've been pondering is how like an expanded flat is basically like the Zoom model, but
Yeah.
like it won't work, of course. So
Right.
how to differentiate between when it's going to be an expanded flat and when it's actually going to be a Zoom model to sell.
Is that a question that you're asking?
Yeah, a question, something I've been pondering, and I've come up with a few things, but just curious your take on it.
So I can see the, coming from way more than that, about 5+ years of Elliott wave, I can see the Elliott wave models form, but I've actually had to stop myself from thinking of them as expanded flats, regular flats, contracted flats. How do I answer this? If you trade, Elliott wave would be a good indication of high time frame counts, right? I can see it. Let's go look here. Let me just turn this off. Was it NAS that I showed you the other day? Let's have a look. Right here. So the expectation here was this was forming some sort of expanded flat, right? With this being the A, this being the B, and we're coming down for a C, right? Which may take this low. Very untidy. Which may take this low and then push higher, right? Can you remember that conversation?
Sure do.
Now that's looking at it in terms of an Elliott wave point of view. And the answer is, I don't have an answer for you now, is how to differentiate between a zoom and an Elliott wave expanded flat or regular flat. All I'm looking at this now, expanded flat at the back of my mind, but more importantly, buy side liquidity taken, sell side liquidity taken. I'm interested in, do we get the retrace here and that, which means that this was probably not a flat correction, right? It's a tough one. It's a tough one. So if you're looking at zoom model, I think the zoom model is more an understanding, and I'd actually give more weight to a zoom model than a flat correction, because a flat correction or Elliott wave can be subjective. To someone it may be a flat correction, to some other person it could have been a 1, 2, 3, 4, 5 sort of diagonal, and now we're in a 1, 2, right? Subjective. So I try not to look at it in terms of this could be a flat pattern. I mean, this could be a flat pattern. A, B, 1, 2, 3, 4, 5. Agree? A, B, C. And then we do that. Subjective. Subjective. Elliott wave may give you the high time frame sort of bias, but if we look at it in terms of zoom, it could be something else here. So in terms of zoom at the bottom, if we had actually just noticed it at the time, this was zoom. Accumulation, let's just get this out. Accumulation, failure swing, liquidity run, push, retrace, continuation. Right? That was zoom. So I try and give this entry model more preference than any Elliott wave pattern I may see, which is the most difficult thing for me to actually do, because I see everything in terms of ABCs and 1, 2, 3s. So it's become increasingly difficult. But once you have the idea done, then you don't need to look. I think move away from the idea of Elliott wave, because all you would have needed to do is that, right? Shift in structure, entry forming at the lowest closing down candle there, and then within this zoom you had another zoom. So if this was the zoom that we expected, then this is another zoom that formed here, but we didn't quite get back to it here. So maybe in here there was something.
And stop loss always the previous low.
The low, yeah, it's always below the low of the liquidity run, right?
Okay.
Here. If this was the real low, this was the run. So this was just a fake low. Now, where you could fail, and you're going to see it in BTC, is if you did this. It would have taken you out. The zoom model formed, right? You thought that these relative equal lows will not be taken. When price did this, 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 and this, you put your stop below here. Not here. You put your stop here.
Mm-hmm.
Now, knowing that your stop was my entry, there, that was my entry, was your stop. I'm not saying you in particular, but I'm saying in general,
Yeah.
this is what people will do. They will find a level here. Price doesn't hit that level, it falls short. Then as price breaks structure here, they'll FOMO in and start loading up on positions. And once they enter positions, they're going to put their stop loss just here. Because price shouldn't come back here, right? It's bullish, price is moving. And then you get that.
Yeah.
And then you get that. Now tell me how different that is from this. It's the same thing. You put your stop below here, price went up here, it came back, it took you out, and then it moved. And that is exactly what inducement is. This was inducement. This was engineering liquidity. It came back for the liquidity, and it actually went to the target that you originally had. But you're not in this trade anymore because you got stopped out here. Don't be too much in a hurry to take a trade. If price moves away from you, leave it. Walk away, wait. You can see the trap being formed. Wait for it. Then enter.
Uh-huh.
Anything else? Have you been paying attention the last few days, Agua?
I took yesterday off.
I'm talking about the other side, the currency
Oh,
side.
Yeah, a little bit, not too much.
Yeah, it's crazy stuff. But we'll get into it. We'll get into it. Just not here, maybe in a group or in DMs. Right. Let me turn this off. How many of you on TikTok caught any of these moves here on NAS, US 30, S&P 500? Itzy besides you. Caught NAS and US 30. Excellent. All you need to know is let's look at it, right? Let's look at NAS. Oh, this is NAS. Right, fine. Now, it's very thin on either side of it, but technically still valid. Buy side taken here. Sell side taken here, which means this is a dealing range and I'm looking for an entry up here somewhere to go short. Now I don't know this. Let's see if these two touched. In terms of an Elliott wave point of view, I'm also thinking this is some sort of flat correction, right? Let's have a look here. But it's nothing confirmed. All this for me is now is accumulation, failure swing, OLR, push, retrace, and we head down. Question is, where do we head down from? Price seems to be pretty balanced in this area here, you agree? No real inefficiencies. Maybe there's something down here in the order block that could be a target for the new week. Price coming back down here, taking liquidity here, and then we get a push back out like that, right, in line with CPI and FOMC this week.
Hey, Bob. How are you?
What's up, Sloth?
Sorry I missed a lot of this. Got
No,
a
it's
dog
fine,
we're
it's
dealing
fine,
with.
it's
So.
fine. It's all recorded.
So for not for NAS, I mean I'm mainly charting SPX, but for SPX, if you zoom out, I've posted this chart in the Discord a couple of times though, but if you go out to like the daily chart, we've got I'm looking for that FBG to fill down to about 3860, right? 3866 maybe.
30?
And then when you look
What was that price?
around 3860, it might be 3866. I think it depends on if it's on SPX or futures chart. Depends. It's a little bit different. Yeah, right there.
Right.
Then when you look to the left, so we've got liquidity that hasn't been taken yet up to 4,200, right?
Yeah.
So that peak that we have at 43.27 or so, that took those equal highs all the way to the left back in May.
Yep.
So what I'm hoping for, just in terms of, because you know me, I like to play swings rather than these smaller day, because I can't trade a lot of those hours, right? Like between 4 a.m. and 7 a.m. I can't take. So I'm hoping for a move to fill that gap down to 3860, then get one more move, partially because we've got that long-term, this whole move down's got that trend line that everybody and their mother is watching.
Yeah.
Right? When you go up from 4,800, that trend line right there, everybody's watching it. We've rejected it again. I think a ton of people probably already took a short at the top of this move. I don't think it's going to be that easy. I think we run those two highs to the left at some point, right? So, I think we run the two highs to the left before we make the major.
And that's exactly what this week is going to most likely set itself up to be, right? Let's talk about this high that was taken, right? Let's talk about this one first. Here. Now you could say those are relative equal highs, right? Because it didn't do much of a much, but it took liquidity, right? So if we play devil's advocate, then we'd say this is going to get taken, right?
Right.
But if we don't, let's look at this model here where we don't need to get up here because there is no liquidity up here because we've taken it already here, right? There's nothing here. If we get back above here, we're not stopping. We're not just going to do that and roll over. No, because there's nothing up here. If we get above here, we're going for here and here. And here, right? So right now there is, there, those two, right? We're only interested in what's happening here and here. For now.
Yeah, those are the two I'm interested in, right? And what happens after that, I don't know. I mean, I expect us to roll over, but
that's the plan. That's the idea, right? You've got obviously you've got this fair value gap line up here, which would be interesting to fill. So we're looking for this to come into there and fill the imbalance here, right? Before it rolls over. And it may be as accurate as just that. Tapping into that and rolling over. Besides that...
Yeah, and on the futures chart, there's a gap there too, right?
That's nice, right? That's perfect. Besides that, you have this high in particular, which was the high before the low was broken, which makes this inducement. So there are no shorts that you should be considering until this high is taken.
Exactly. Yes.
Until we take this, fill the imbalance here, then show the willingness to do something here, is only when we'll consider rolling over, right? Now, we're in a position where, like I've mentioned just now, we've taken buy side here, or whether you want to call it here, and we've taken sell side here. You agree? Which makes
Yes.
this a huge dealing range, which is bearish. Right? Buy side was taken first.
Can I interrupt?
You can.
You gave us last time a fib projection. Can this
Yes.
be useful in this case?
Yes, you can. You can, most likely. Let's have a look at that, right? When using the fib projection, you would, let's see if we get a decent size order block or range to use it from. Let's start with this one here. So we took that range or that order block. And you were looking for first objective, 3.5. There we go. Yeah, right?
It fits perfect.
You could actually use wicks. Right, so if we took the order block there, usually you take a range for that kind of projection, so I don't want to take too high of a range here, because these are all order blocks here, but it is a range, right? It is a range. We'll have to scale it down maybe on a lower time frame just to figure some things out here. Let's have a look here. Let's try using this guy here on a 4 hour. See that? Just above 41.6880, which is just above the inducement level. That would be your first objective. Your initial impulse, which is the minus 1.5, you can see hit there perfectly. And price is moving towards the first objective, 41.6880. So there's a good chance that it may hit there, Sloth. Here's the doozy though. Here's the doozy. 4,500. Second objective. But do you know what that does? If that happens, it means we've shifted.
Marcus took you back.
Yep. That's what it means.
That would be bullish.
Yeah, it would be bullish. Which also means that this is now turning into a higher time frame zoom model, accumulation, failure swing, liquidity run, the push up here, a retrace that comes in here, somewhere here, and then gone. That would be interesting. So for bearishness or rolling over, we don't want to see it get that high. Yeah, we don't want it to get that high. Ideally, we want to see it roll over here.
Thanks God.
We want to see it roll over here. because those have implications. Even if it gets here, it can roll over just to here and then start moving up here. Things we have to watch out for. All of this has created trendline liquidity here. And you know the story, elevator up. Sorry, staircase up.
Yeah, and that's
staircase up, elevator down.
right. That's the other thing, right? So everyone's looking for the big crash, right? Like the big one.
Yeah.
I don't think we're gonna wake up with like a 1% down day, 2% down day. I think when the big one happens,
Yeah.
we're gonna wake up with the limit down because of some crazy story.
Yep.
And so, because they're not gonna make it that easy for us to just,
No, they're not.
you know, unless you have the balls to scale in to these shorts up in this 4,200 area, and you've scaled in before the day that drops. If you're waiting for, I don't think we're going to get structure up there. I think the market is just going to take a big shit.
Yeah, it's not.
Morning.
You're gonna have to, it's gonna take a big shit, and let's have a look here, right? It's gonna be akin to you missing out on a news day or news event. It's gonna be something like market opens, boom. Here, market opens, boom. Doesn't give you, generally won't give you.
Right.
You're gonna have to be in that position or take that position as the open comes or just before. Right, let's have a look at something
exactly.
here. Because this was the
That's
interesting...
partially. Yeah, my plan is to, if I get 3860, I'm going to go long from there.
Yeah.
And then if we up to those two objectives, I'll scale into short, so at least I'll be fine losing that profit, right? I've been sitting patiently in cash for a year and a half now. So I'll scale in, and then if I don't get the
week, right? That may happen within the next 3 days. That's going to happen, most likely.
Right.
Right, and I think Agua, this was the one we were looking at. Sorry, guys. This A, B, 1, 2, 3, 4, 5. Right now, it's funny that you say 3860 because things happen at 3860. Let's have a look. Let's scale down a bit. At 3860, we are in breaker territory, first of all. I'm almost certain of it. Let's have a look here. Right, we have this. There, right around there. It's breaker territory. It should be fair value for buying because the market was inefficient in its delivery here and here when it did this, right? The market was not offered to any sellers here.
Right.
But isn't there a fair value gap below slots entry?
Yep.
Exactly there where you point.
I know, it's here and here. All of this is...
Okay.
It doesn't mean the price has to go there now. There's also one down here. Does it mean price is going to go there? No, it doesn't. Not now, at least. It could be months from now.
Mm-hmm.
What we are saying is, if this was the range, let's say here to here, look at the 50%. Where should you be considering buying? Not anywhere up here. This is all premium. You want to be buying below here. Down to here even. So let's see what gives. It may even run down there and fill those gaps. Take the liquidity below that and then move.
And that's what I mean. Because when it goes to slots level, it breaks market structure.
Yep.
Right. So the safe entry will be, if you see where Poison's 3 is marked, the safe entry will be we drop down to 3860 and we reclaim that 3905
right. So
level.
what you're going to start to see is the safe entry is, you know where you want your entry to form, right? And if it's around 3860, then we are going to need to start seeing down candles form around that level there in terms of order blocks, right? Say it
Yeah.
went, whether it's there or whether it's down here. If it's here, I'm not trusting anything in this area here, because price does not reverse from imbalance. Price reverses from seeking liquidity in liquidity pools. So if you're expecting a reversal, you're going to think here now. That's where we reverse from. There. We don't reverse from the middle of nowhere. Unless we create enough liquidity to reverse. On both sides. But as it stands, you can't just blindly enter based on a breaker or fair value gap. No. It needs liquidity somewhere. The pool of liquidity that I'm seeing right now is here. Which puts us back into this, the first situation that I described to you on Bitcoin. You have a move like this, and this. Somewhere down here is a PD array that you wanted to enter in, right? We know this is an order block down here, a huge order block.
Yeah, we had that a while ago. That was our original. We were looking for our entry there
Yeah,
and never got it.
never got it. Why? It's engineered liquidity here, all the way up here. Now,
Yeah, same for Bitcoin.
same for Bitcoin, same story, right?
Yeah.
Everyone got bullish in here. And they were trailing stops below here, and then the stops below here. These are all liquidity pools now, right? So I wouldn't be surprised if we get speed going into this. While it may seem bearish, it'll be the most bullish thing to happen, to be honest with you. Because you grab the liquidity below all of this. You wait for your model to form and you take it. And that's a good one. I'll be honest with you, that's a good one. Because if price is expanding, in this case downwards, it would seek an order block. Expansion seeks order block. Reversals seek liquidity pools. Retracements will seek imbalances. So if price was merely retracing before continuing, yeah, but we're not in that category now. We were maybe in that kind of retracement category here. Price went up, retrace, continue, retrace, continue, retrace, continue, right? As it did this, it could only reverse once liquidity was taken here and then move away. The rest of the time it's just retracement and continue, retracement and continue. Reversals need liquidity. Without any liquidity being taken, there's no reversal. Which makes me think, why, even though this is fair value for buying, it's going to be something we have to monitor. Now, if I think about it in terms of Elliott wave, what if this was an A wave? What if this was a B wave? What if this was a C wave? And what if this is just an A? This is a B, and this is a C as an X wave. So now we got a W, now we got an X, and we're going to push for a Y. So that would give us this being the larger correction of this, right? Then that I can accept. Sucker people in, get them thinking that the market is reversed. So then this would be one part of the pattern. This would be the second, then that. Even knowing that, I'm still going to long this if we get this. There's a lot of things to think about. I think if we stick to the ideas of the concepts that price does not reverse if liquidity is not taken, price continues only, that would be a retracement. Expansion seek order block. So if we get an price expanding down, it's going to seek an order block and ideally liquidity pool for reversal. Same thing you're seeing up here. Let's do this now. Let's do that. And let's do that. Make sense? This is how you want to see it form. Where we have this creating a level, this running the level. Once we get up here, we look for the retrace and the continuation. We don't
Can you pin that to Discord?
Yeah, send it
I'll
to you.
take a
Even if it goes down this way, right? Remember, it's not going to be one straight push down. The way this is forming, it's going to look like this, creating the dealing range here, and then we're going to have this, and then this. Now, if that's the case, I know time-wise, let's have a look here, that I don't want that to take as long as this has taken, which means this to this. And we put on 1. This should not take longer than the mid-Jan. It should be over well before mid-Jan. Because you don't want to see, if this is an X wave, if this was the W, and this is an X, you don't want to see two things happen. You don't want it firstly to be more complex than the W wave. So if the W was a zigzag, X can be a zigzag. You don't also want the X wave to take as much time as the W. So if this took this amount of time, you don't want it to come past the 19th of January. So whatever this does here needs to finish off here, do its thing, and kick off. We may even go higher than that, Slotman. You realize that if this is a larger correction of the entire move down, means that we need to consider this, and we need to consider 70.5 at least here. Now here's the mind fuck that happens here, right? If you get this, it seemingly seems like we've had a break in structure. But then that happens.
Yeah, and on top of that, you know what this is going to do, right? Everybody and their mom is going to start screaming, okay, we now have a higher low, which hasn't happened on this move down, right? So that's the mindfuck we need, because everybody right now, I think, is still under the idea that we're going to see a big crash.
Can't.
And something has to happen structurally for that mindset to change. across the board consensus wise,
Yeah.
and only those of us watching for this kind of a move are going to be ready for it then when it comes.
Yep.
So I like it.
Give me 1 second. Yeah, I think we need to. Yeah, we need to be prepared for that because this isn't turning out the way everyone wants, right? Everyone wants immediately this, right? But I
Depending
think,
on of the funk and CPI.
yeah, so we've got CPI and we've got FOMC, which can be the catalyst to start this down. Between now and the mid of Jan, it needs to be that. And then that.
Huh.
Now,
So just to be aware, right? So
Yep.
from a seasonal standpoint, the end of the year, especially when markets are down, this last couple of weeks tend to be bullish, right? There's going to be reallocation of funds into all these hedge
Yep.
funds and pension funds, et cetera. Because markets have been down for the year, there's going to be an allocation switching, actually rolling over into stocks, most likely. My guess is, just from a fundamental news standpoint, the move down should happen earlier in the week. FOMC ends up being a catalyst for us to move up, or CPI,
Yep.
and we get that.
So it's CPI on Tuesday and then FOMC, which means CPI can do this, FOMC can do that, right?
Right.
But that's a day apart. And if we
Yeah.
look at
And
our, yeah,
I think 4 out of the last 5 FOMCs or CPIs, I mean, have been on the day of have been bullish, right?
yep,
Maybe the day
I
after.
think these were.
So pump before, pump, yeah.
Now that also
Get
ties
everyone
in,
bullish.
yeah, it ties into
Yeah.
to a weekly profile where generally you would see the market bottom or top on a Wednesday or a Tuesday. So now we have Tuesday and Wednesday in play. So if you start Monday like this, right? Tuesday like this, Wednesday comes in, takes Tuesday's high, and then goes down. Let's see how it goes. We know where the big shorts happen up here. Price shouldn't come back to this sort of level. If it does, let's look at 1 hour quickly. The dealing range that we're currently dealing with is here. The area that we're interested in is in the FVG here, and that only happens if we maybe get this tomorrow. Tuesday CPI bullish, Wednesday high of the week, and then we roll over. This could be the fake out of the week. Monday can do that, which gives us the 5th wave. Tuesday, Wednesday, that. Thursday, and then next week, there. All you have to be interested in this next week or so is, if price comes to the level here, which is in premium, that's where you're going to short. That's all that you're interested in. This is the shorting level. How it gets there, not interested. If we take the low first here, show us a reversal pattern here, you can probably long it up here. When it gets here, look for the reversal here. Because what is this feeding into? The head and shoulders meme, right? And what is the target of the head and shoulders meme? Let's have a look. right? These lows here, which is what we said we needed taken out here. So that's interesting. Could we possibly use an ART range to project something? Let's have a look. This is quite big. Also big. Maybe, just maybe, I could use this. Yep. So initial impulse down here, right? That's your initial impulse, is the 1.5. The 0.5, I'm going to show you, watch the 0.5 here, right? Is where price is going to retest. The objective is down here. And the second objective is here. So all of this works out projection wise. If you don't believe me, let's take a look. Let's finish off on this and we'll maybe go to gold, right? Let's look at this quickly. Where were we? 15 minute. Where were we? Here, let's look at this one. Right. Do we take bodies? Let's have a look. There we go, right? Fibbed from the bodies of the order block here. Initial impulse, perfect. Retracement to the 0.5 of the order block, and price finished off at the first objective, which is 3.5. Was the second objective hit? Yep, there you go, second objective hit. After these two levels here are stop run levels. So price stops, hits the second objective here, 5.5 standard deviations off this order block. Yeah, so this can work. The way we had it, the range that we just used, we could use that. Let's have a look here. We'll use the candle bodies next. The there to there. Let me post this in the Discord just so we are aware of all the levels. Copy chart image. There. Right. So we did S&P, NAS and US 30 are going to almost follow the same route. Oil. Do I even want to look at oil? Oil has been such a disappointment. Look at this shit. Even more bearish than we thought. Sloth. Took buy side, took sell side. Any retraces are for shorting. Send it to hell. Simply it. I don't think we're going to get anything decent out of oil now. Gold. I think gold still has some, the fact that we did this, right? Let's take a look here. I think that this zone in here, all of this, let's take a look at this. Took sell side, took buy side by only just a bit, which makes this the dealing range, and you are looking for retracements in here. Now couple that with the fact that I think that all of this was just accumulation happening in here. So if you get a retracement on gold, that's the one you want to take this week. Target still left unfilled on the upside. So NAS and gold tend to move in opposite sort of directions. So if we expect some upside on gold, then NAS should do that. Yeah, upside on gold, downside on NAS. Oil, retrace, short the shit out of it. US 30 created liquidity here. If it takes the lows here, it would have created a dealing range from the top here to the bottom here. The retracement is going to seek this area of liquidity and then go short. Same story on NAS, I suppose. Yeah, we can do a live session on Wednesday, Al Dente, after FOMC, no problem.
Thank you.
Same story on NAS, but it's already done it now, right? It's sell side, buy side, sell side. That was the retracement. If it does this, if it breaks the lows, then we'll look to come back into this fair value gap here. And then send it to shit. We'll get bullish on NAS maybe Tuesday, Wednesday. Wednesday being the high of the week. And then send it to hell. Actually want it to come all the way back down here. Take this guy out. Reverse here and then send it up. Right, that's it. We've covered everything we needed to cover. We've gone through BTC slot if you want here. Buy side taken, sell side taken, dealing range created. We're looking for a move back up here, ideally around 17.2, 200, 240. Send it to hell. Hell being 15.8k down here. Because we may see that come after, like I said. Just like S&P and NAS and all of them do whatever they need to do, we may see that after. So let's see how that goes.
Yeah. Yeah, and I'm patiently waiting for the CRV entry corresponding to Bitcoin hitting our 15.8. So I've just been sitting on my hands for
you just
the
have
most
to sit on
part.
your hands. We can look at it really quickly before I go off. Hold on 1 second. Just before I go off, we'll look at it. There. About gold. Yes, I'm listening. About gold. It's talk. Type your question out, Itzy. Gold H4, yes, what about it? Don't you think with the reaction inside the FVG we could be selling? Let's look at that. H4. Yep, there's always the possibility that could happen. You do have buy side, sell side. Price has come in and rebalanced here. So 5 minute gives us a retracement back into premium where we have another FEG that can take us lower. Possible. Hold on 1 second. It's all possible. If you look at it in terms in the, let's have a look here. Get this accurate. Go down to a 15-minute. If you look at this in terms of definition, we created a dealing range, right? Took buy side, took sell side. This is the retracement into the fair value gap. I would like to see if we are going to be bearish. Let's have a look here. If you want to be bearish, then you can't have this being done, right? You want to, so this took sell side and then it took buy side, which makes this the dealing range, which means you're looking for longs in the order block, right? If you want to be bearish, then you need, from buy side, you need the sell side taken, then the retracement, then we can be more bearish. Get it? So until we take, so if this was accumulation, this was the failure swing, and this was the liquidity run, which only just took it there, until we break the low of the failure swing, I won't be bearish. But if we do break the low of the failure swing, I'd look at this being liquidity. I'd wait for price to come back into here, maybe the fair value gap here, the order block up here, then I'd sell. Right. That's it, boys. I will record, upload it to YouTube, and I will see you all in Telegram, and I will see you in Discord. Thanks for joining.
Thank you.
Thanks, guys.
Cheers.